Shazi, are you getting any requests for joining? People are requesting me. I get their message.
The requests are going to you now because you are the host, I
Okay.
believe.
Okay. So I need to keep adding into it everyone who can make a request. Okay, that's fine. No problem. It's okay. Manageable. I have multiple screens. I can see it. Okay. Yep. Yeah. People are coming to me.
Yeah. So hopefully, Ashraf, we have the co-host as well, so we can allow people to join. It's Bilal at the
Okay.
back end. He's working on it.
Okay. So should be okay now if anybody requests, send a request, right?
Anybody requests, we'll let them in.
Perfect.
Yeah. Thank you.
All right, let's crack in. Let's see some financial world. Let's make some money. All right, guys. So all right, so I request you guys if you can please mute your mic so it's gonna be easier for me to continue. Guys,
maybe
please
like
mute your
the host can Shajak, if you can mute everyone.
yeah. Okay, got it. All right, so hello. I'm gonna say traders or QBN family members. Good morning, good afternoon, and good evening, different part of the world. And today is 24th of Feb 2025. We normally call the first trading day of the week, and we're going to continue our webinar. And this is the series of webinars which we have taken initiative for the QBN members and all the people around the world who would like to take the advantage of our proprietary system MyQFX to watch live analysis and learn forex trading in a real-time environment. That's why we do it. So if you haven't watched my previous analysis, I highly recommend you can find those in webinars on MyQFX YouTube. It's better to watch all of them, then you will understand the sequence we have developed these webinars in order to understand the trading as well as to understand the to the MyQFX platform. And then once you join MyQBN or MyQFX platform, then it's going to be much easier, and then the transition is going to be very smooth. Otherwise, once you join MyQFX, a lot of things going on, analysis, market commentary and everything. And sometimes it might be overwhelmed because if you have a completely new, have no idea. So it's very important to watch those on previous analysis, and you can speed up if you're thinking it's taking time. So it's very important. So today we're going to talk about the trading, not this one. Let's see. We have this. Just give me. Today we're going to talk about the trading. Let me see here. We have it. Fundamental and technical analysis. So let me do it. I think it's so today I think technology is not in our favor, is giving us a headache, right? So let me change it, this one quickly. Okay, paste. Yeah. What a beautiful voice. Okay. Right. So today we're going to talk about the fundamental and the technical analysis. And then we're going to talk about in bit detail about the candlestick pattern and market signal. And if you understand this fundamental and technical analysis plus the candlestick patterns, then you can pick up any financial instruments, either crypto, forex, stock market. It's slightly different candlestick pattern, but more or less is the same, right? Then we're going to open a chart, and then we can see the live setups and the order placement where you should be putting in order, right? So this is what we're going to talk about today. All right, so as always, this is homework, disclaimer, and you can take the picture and read it. I'm going to read the last paragraph. So we are not affiliated with, nor we do represent any security broker, dealer, investment company. We are not licensed or qualified or provide any investment advisory. Any trading decision we share are for the information purpose only and should not be taken as financial or investment advice. It is important to verify all information independently, and any action you take based on that information are entirely your own responsibility. This is just like a homework, okay? Right, let's talk about the fundamental analysis. I'm not going to go in more detail. I'm just going to go as a layman, so you will understand, because mostly we are, our audience are, as a retail traders, right? So in that respect, I'm going to be going a little bit information. Mainly, I'm going to go through to the candlestick pattern. Okay. When we're talking about the fundamental analysis in forex trading, fundamental analysis involves evaluating the economic, financial, and geopolitical factors that influence the supply and demand for the currency. The core idea is that the currency's value is tied to the health of the country economy. Okay, so what does it mean that, when we look at any pair, for example, if you're looking about the dollar, just to give you an example, or if you're looking at the pound, so we look at what's happening in the US, like take a recent example of, electing a Trump, how that's going to be beneficial to the country, how that's going to make improvements to the country, right? So, and that's basically, we look at what our decisions has been taking and keeping all these four major components, which is we look at what are the economic indicators are guiding us, or interest rate, how the banks are making decisions, geopolitical events, what's happening, and the market sentiment. So the way we look at the key metrics is GDP growth, inflation, employment rates, and trade balance, and all those things, basically the figures, because every country release those kind of informations periodically, some in monthly basis, quarterly basis, or weekly basis. So we look at those information, and based on that, we look at if this data information is basically giving us the indication of the strength of the country economically. And then we look at the charts, and then we look at make a decision. So that's very important. I'm going to show you a website which is called a Forex Factory, where you can find all that information when this data is going to release, and how that data is more important, and how that may impact in trading, though I'm going to show you in a minute. So then we also look at the interest rate and central bank policies. Like, for example, if the central banks increase the interest rate, all right, so that basically attract the foreign capital, because the most of people, they are looking to invest that country, who give us the more return on the interest. And that's why we look at those kind of announcement, especially in the US, we call a Federal Reserve, European Central Bank, or Bank of Japan, right? So that's also impact to the currency. And then we look at the geopolitical events and the news, like elections. Like recently, I give you an example of the Trump being elected as a president, how that's going to make impact, good and bad. We look at all the indicators, and then we basically look at the charts and look at if the fundamental supporting, or if the technical supporting to the fundamental. Then we look at the opportunity. We're going to discuss in a minute. Then we look at the market sentiment beyond hard data, quantitative factors such as investor sentiment. We look at, where basically most of the, investors are heading towards in terms of investment, other than stock, shares, crypto, and we look at their sentiment, and based on that, we make decisions. So these are the very important for major component in terms of the fundamental analysis. So as a trader, let's suppose, where I'm going to get that information, and when this data is going to release, and how I'm going to implement into the trading. So we discuss all these fundamental high impacts news data every single day, twice a day, right? Reason why, because this data is released in different time, different period. So we discussed that information, and I am going to show you the website, which is a pretty straightforward and standard. You can go. Let's talk about the website. I'm going to type here. If you look at the there's a different websites. I normally take the Forex Factory because it has a bit of information. So the way I look at every week, we look at the these are the fundamental news is about to release, but this timing is based on because I'm based in the UK, trading on the UK time frame. So I put in my time frame. So if you are living in your zone, and if this time at the top, if you look at your time is not according to your computer time or your region time. So what you have to do, just click on this one, and then you can select your region time, and this time will be automatically adjust. Then it's going to be much easier when this news is going to release. Like today, we have seen there's a bank holiday in the Japan, so we haven't seen in the volatility in the Asian session, but we have seen in the European session. So today, this data is going to release, what time is going to release, and if you can, go here and move forward, you can see tomorrow what kind of data. If you want to see the whole week, that's what we discuss in weekly basis. So here you can also filter this data. You can filter, let's suppose this is the very low impact data. This is sometime bank holiday. So we normally focus on medium, and this is the medium data, impact data. This is the high impact data, and you apply the filter in Forex Factory, and you will see only medium and high impact. Okay, so now look, you can see here today we have the bank, the president's speech is coming. That's very important. Traders are looking if he make any decision which can help to the country. That's going to help, maybe boost the dollar, or if anything in negative things, then might going to be make a bearishness on the dollar. So we look at this data. So okay, now the key important thing, what this data is about, and if you really want to see like CPI data, what is the CPI data? Why yearly by year? This is data is coming for, if you look at for Aussie dollar. And if you really want to know what about it, because if you click on this is, you can see the data which is released previous, the data was 2.5%, and expected this data is 2.6%, and it's going to release at 12:30 a.m. London time, which is the midnight, but it's going to be morning time on the Australian in Australia. So how this data is going to make what is CPI data and how that's going to make impact. And if you just click on this icon, and it will give you information. So you can see it today is much easier to understand. If you're talking about 20, 30 years back, you have to go through, because there wasn't any high-speed information. Today is one finger, you can have everything Okay, so you can say usual effect, what is going to be if the data is coming higher, and you can see the previous data when it's released. If this data is actual, then the forecast is good for the currency. If the actual data is negative, then it's not good for the currency. When is released, you can see here, and the most important thing you should know about why the trader should care. Consumer price account for a majority of overall inflation. Inflation is important to currency valuation because rising pricing lead the central bank to raise the interest rate out of the respect for their inflation containment mandate, right? So today, the reason why I'm giving you to how to keeping up to date with the fundamental, this is the website. You can go through and you can organize it, and every information, what is the GDP quarter by quarter is releasing on Thursday 1:30 p.m. London time. So being a trader, what we said, okay, we are ready for that, and we look at, okay, how that's going to make impact. Then we look at unemployment claim data is going to release, and we look at we get this sort of like indication. Let's say the previous was 219K people was unemployed, expected increasement. So if more people are unemployed, it means it's no good for the currency, right? So, but this is just a forecast. This is not the best actual figure. When the actual figure come, and if this actual figure is lower than forecast and lower than this one, that's the good sign. Then we say, oh, dollar is going to go shoot up. That's what we look at. And then if the data is higher, with this one and this one, then probably dollar is going to go weaker because more people are unemployed. So we look at the fundamental in a way and this way, and then this is the bias we develop based on the data release. Then the second question comes, when to get in, when to get out in a trading. That's why we create a second component, which is called technical analysis. We look at the technical analysis. So basically, most of the Forex is much easier as compared to the crypto because you can find all that information. And to be honest, the thing of being a retail trader, you don't have to be 8 hours and 4 hours in the screen. You look at the data when you set up the timing and set up the alarm, because at that time the data is just before 20 minutes before, 30 minutes, or 5 minutes, 10 minutes before. It depends on your availability. And once the data release and see the price action, see the charts, how it's going to react, and get sort of experience and get to know how this data is going to making the changes in the market, and learn it. And then you have everything in one place, basically. As being a retail trader, this website is more than enough to understand the fundamental, okay? But if you really want to know about that information, how that's going to make, impact, new home sales and everything, to be honest, today is a very easy, just copy and paste this information, put in a chat GPT, ask that information, it will help you, give you more detail. So it's much easier to trade, to gather that information as compared to 30, 20 years back. So this is what we look at every day. We look at all in MyQFX platform. We have this data is already coming in within the MyQFX platform. Traders don't need to go in, Forex Factory, but if you not trading independently, so this is what I recommend. So we look at this fundamental every day, and then afterwards, when we look at, okay, we bias develop, and then we look at the technical side of it. So when the things comes to the technical analysis in forex trading, technical analysis focus on the historical price data and trading volume to forecast the future price movement. It based on the idea and the past market behavior can help predict future trend. Key components include chart and price pattern. So if you look at my first webinar where I explained about the price behavior and the price structure and the price pattern, because of that is very important, because why I give them in the first place, because if you just come straight to the MyQFX platform, you have no idea what I'm talking, but if you go through that webinar, you will have, understanding what I'm talking about. So then we have, chart patterns. I'm going to show you in a minute what kind of patterns price develop. So again, as mentioned here, technical analysis is more based on the historical data, because the previous price movement always leave us some clue. Based on that, we basically predict in future and develop a high probability, opportunity when we look at the fundamental. And if the fundamental align with the chart pattern and the technical analysis, that is we call a high probability. So industry, some people also using indicators. The indicators is basically, some people have developed certain software, and that software is based on the historical price movements. For example, let's suppose if the price is going to behave, like let's say if the price is going to behave certain level or certain area, so this should happen. So then based on that, they assume, they indicate that there's a possibility of opportunity, right? But keep in mind, this is very, very important. Most of the retail I've seen, they're basically looking for the indicators and the trading system, but indicators system are based on the past price movement. There is no guarantee for the future movement. And to be honest, my experience, all these indicators and oscillators looks good on chart, but when you're trading it, it's a very challenging. But as a professional trader, you take that information and then you align it with the fundamental and the price behavior in chart, then you can take maximum benefit, no doubt. So it's very important, because as a human psychology, we are always looking for the shortcut, but this is nothing wrong with it. But it doesn't work in trading. It might gamble it, you might win one time, two time, but on the long term, you won't be able to succeed. So it's no good to 100% based on the technical indicators. Understand the whole game. So then again, we look at the support and resistance level. Support and resistance level, like when the price basically is a simple way I'm going to explain to you here. When the price goes up here and respects some area and can't go above this one, so we call a resistance. Same thing when the price come here and down and respect this level many times, we call a support level. So this is again based on the previous price action. We look at there's a possibility price might going to respect and shoot up, or there might be a possibility of price break and go down. So as a trader, what we're looking here, we're always looking for the edge. So support and resistance most of time give us an edge. So is identify the price of where the market has historically, respected those links. So trend line and channels, that again, that's we define the trend. So for example, I'll give you here, if the price is going up, up and up, and we look at this is the trend line, and this is trend resistance, trend support. This indicate that the price is going ahead. So these kind of trend lines and channels give us the information that the market is going up. And same thing when the price come down and we look at price develop another downside channel or downside support and resistance, that indicates the price hypothetically probably is going to be going downside. So it's very important. So again, fundamental and the technical, we basically provide both of information in our on MyQFX platform. But we mainly provide a lot of information about the technical analysis, because that's what we look at. Because fundamental, I always said fundamental can be a rumor, but technical cannot be a rumor. Because if somebody said, okay, dollar is going to shoot up or gold is going to go up or down, but how are we going to identify if the dollar is going up and down, right? So we need to see the charts. And that's why the technical is very important, but fundamental is also very important. It gives you an edge, to be honest. So for example, if we said, okay, today the central bank of reserve is going to announce some information about the interest rate, and the technical looking, okay, the dollar is creating a, some sort of pattern. Give you an example here, just to give you an example. Let's say if the price is developing here like that, and then we look at, and then sort of patterns like we call a rising wedge, right? So when the price is here and we look at, okay, this data is going to release for the dollar, and more likely the interest rate is going to decrease or increase. So if we look at here, say this sort of pattern give us this sort of pattern when the price moving up here, give us the rising wedge. It means the high probability of price might gonna shoot down. But look at here, this time we have seen the data release, interest rate has been decreased, and then market came back, give us the confirmation. We have, as a trader, we get the early sign. Based on the technical, we wait for the fundamental to be released and combine those, then look for the opportunity. This is what we look at all the time. So most of the professional, they basically keep both of them, fundamental and the technical, and then look for the opportunity. I hope that makes sense. Now we have called candlestick pattern, right? So let me show you the candlestick pattern, a little bit information, and it's a very interesting information. Candlestick pattern is very, if you just focus on the candlestick pattern, you will find a lot of information. Okay, so I pick up to my previous presentation. That was the beautiful. Had an amazing time with the audience. So, okay, feel free to ask questions. And, it's just like, we're building, QBN is a community, guys. It's just helping each other. So I'm here to help you guys to trade successfully. So ask questions, anything related to the trading, feel free to ask. Okay. So, right. So candlestick pattern. So what we're going to discuss here, what is the candlestick pattern, right? Then we discuss how to read a Japanese candlestick chart. By the way, there's a two kind of candlestick. One is called bar one, and one is the Japanese candlestick. Well, we're going to go with the Japanese candlestick. So what is the bullish reversal candle pattern? Means like price is coming down, and when we think the price is going to go up. So for example, if the price is coming down, when we think the price is going to go up, and when we see the continuation, the price is going to continue. This is more about when the price is going up, right? So then we're going to talk about, get information about the bearish reversal, that the price is already going up and is coming down. When we see it's going to reverse, and when it's going to be continue, right, on to the downside. Then we're going to take, okay, certain area of price when there's a indecision situation right now, that might be a possibility price might going to shoot up or price might going to shoot down. So that's going to be indecision candlestick pattern. So we have to look at this one. Then we have to look at the continuation pattern. If the price is going up and then we said, okay, price going to continue, what sort of candlestick pattern we should be looking into it, and what sort of candlestick pattern is going to give us the indication of continuation. But if you master these things, this is the basics one. And we discuss this thing every single day when I'm looking at 4-hour analysis in the platform. Always, most of time, I discuss with my trader. Okay, so and then how to understand and any candlestick pattern easily, so we can discuss. Okay, so what is the candlestick pattern? So quickly, Japanese candlestick pattern originated from Japanese rice trader called Municia Huma during the 1970s, right? It was introduced to the Western world by the Stevenson in his book called Japanese. I've gone through all of his training materials, Stevenson, to understand it. When I started my, introduction into candlestick pattern, he's the master and explained it so amazingly. And it's a very interesting, if you look at this art, to understand this art as an art, you will enjoy. Let me explain to you how. Okay, so let's look at the candlestick pattern, right? So this is the basics. When we say, okay, this is the bearish candle, this is the bullish candle, what does it mean? When we say this is the long, this is the short candle, what does it mean? Okay, let's talk about the bullish candle, right? So when we say the price is going up, so just to indicate, we have given two different color, assume orange or red color or green color. When there's a bullish candle, the bullish candle start from here, from the bottom, and close at the top. So these wicks, what does it mean? That price started here, came down, and then come back here, and then go up here. This is the high, and then come back here and candle close. So when we look at the charts, right? In a chart, we look at the chart is divided by the time frame. So you can watch in 1 minute, 5 minutes, 1 hour, 2 hour, 4 hour, or daily or weekly charts. So let's assume if I'm looking a 4-hour chart, or we normally analyze a 4-hour. So we look at the 4-hour, the price started here, came down here, the low, and then this is the high, and this is the close. So this candle looks like a bullish candle because started here and closed here, high here and low here. So this is what we call the bullish candle, or long candle, or this is what we look at for this one. This one, same thing, but it start from the top. And go high, and then come back to low here, and then close this candle here. So let's suppose in 4-hour, when the 4-hour started here, it started here and then came down up, and then within the 4-hour, this is the high price went, this is the low price went, here the 4-hour finished and the candle closed. So this is, you can apply in all time frame, looking in a daily, weekly, monthly in chart, so you can look at. So this is the way we look at. This is we call a body, and this is we call shadows. You can see here, lower shadow. This is called upper shadow. This is called open here, close here for the short downside. For long, we look at here. This is the open, and this is a close. So this is a simple understanding of the chart candlestick pattern. And then let's look at the let's look at the bullish reversal candlestick pattern. Okay, so what is this? This is called a hammer. It's look like a hammer, right? So let me explain to you how we recognize. Okay, so let me take this information. So I'm going to explain to you as a layman. Okay, right. So what we look at, the way I look at, this candlestick pattern is giving me a story. You can see this is body. You can see a candle start here, open, because this is a bull body. So start here and close here. This is the high event, and this is the low event. So low is, this is the maximum low price event. So what happened here? So what's happening here, basically? What I'm talking about the story. Story is, in the market, there's a bull and bears, they're fighting each other. So what happened here? The bull started here, and then the bear, basically bearish market, try to push it down, push it down, push it down. Before with this candle established, you might have seen a bearish candle, huge bearish candle. So bear was fighting and pushing the market down. What happened? The bull kicked him up. And then at the top, price started here, and here the price went up and then come and close. So you can see here this body is developed as a bullish. So it means I normally call bull has taken over, bull has won the war. Yeah. And that's give us the, okay, bull has won, then next high probability price am I going to shoot up. So what kind of candlestick pattern it is, we normally call the hammer. I hope that makes sense. Okay. All right, let's move to another one. This is another give us the price, possibility, high probability is the top, okay? So another one we call the bullish engulfing candle, all right? So that's another story, okay? So let me get this information first, and I'm going to show you tell you the story. Okay, so look at this one here. The bearish candle started here and then went low and then closed here. So this is the bearish candle. Then another candle started here, then came down, but at the moment, then price came up, right? Even it breaks above, went above the previous high of candle, and then it went high and then closed. So what happened here? So this one indicate a very strong bearish downside movement. When what happened here is the bull came in the market. I can see there's a lot of players of buying, and bull has taken care of it. So you can see the body is cover this body. So it means the bull has taken care of, bull has won the war. So basically, this is we call a bullish engulfing candle, means that the bull is in the market right now. Because the bear, you can see here, the pressure is low and the bull has taken care of. That's what we do it, right? So this is what we call a bullish engulfing candle. And that means that the high probability that the price might gonna continue. So you can go and find the chart and you can look this pattern. And then of course, we align other elements into it, which is called support and resistance and the fundamental. Plus this candlestick pattern help us to make a high probability decisions. Okay. So let's look at another one is look at here, piercing pattern. What does it mean here? Like, let me give you an example here. So let's look at this information here. So what we have in the information here, again, let me tell you the story, and then because human psychology story always remember, right? So you can see here the price started here, bearish candle, and came down, and then this is the go low and close. Then the bullish candle started here. So the bullish candle started here and then came up, right? Even though if you see that the bullish candle is small, right? But the way we look at here, let's look at from here to here, the 50%. So we can see there's a more high probability the price body is covered more than 50% of the previous candle. There's a high probability because the bull was trying it with the tremendous pressure, but the bull has basically gained some power, which is have more than 50% of this body has been, close above that. There's a more high probability the price might gonna continue. This is the way to look at it, because this is we call the previous price action. This is called the current price action. In current price action, we can see here the bull is getting strength. That's why it's been covered more than 50% of this candle. So there's a high probability price might gonna continue. It's because the current price action there is very important, but also the previous price action is also important because we look at what's happening in the market. We have seen some impulsive reaction. But the current price action is telling us that might be a speculations or something. But now we can see the bull is taking control. So let's see here if the price going to continue. High probability price might going to continue. All right, so that's another one. Let's look at another one. Tweezer bottom. Okay, so what happened here? When you see this kind of candlestick pattern, and if you look at the story point of view, we have bear started here, going up here, down, and then come up here, and then this is the candle close, then the candle started here, and then went, first of all went down, so it looked like it's going to be a bearish candle, but the price came back here. Bull is in basically in power now. So closing of this candle, we can see here that even this one, bear candle started, but bear was trying to push the market down even here, but the end, what happened here, bull has won the war. Then the high probability might gonna show up, because these spikes, we call it rejection, and if these spikes come in support level, that's the high probability that the price might gonna shoot up. So this is what we call the tweezer bottom. Okay, let's move into the okay, so let's look at the another chart. Sorry for my keyboard. Okay. Right, so morning star. Right, so this is, what does it mean, morning start here? Okay. So when you see, okay, all right, so let's talk here what happened here. So if you look at this candle, it's giving us a very strong bearish movement. Then afterwards in 4 hours, you can see the price started here, went up, came down, and closed at the same place, right? So we're going to see what kind of candlestick pattern in next few slides, okay? So when this kind of pattern is developed, and after that, you can see here the price bullish candle started, open price here. Instead of going down, price started here, close here. So it developed a bullish engulfing candle. Even if this candle is 50% of this one, we still consider, in Forex trading, we still consider this is a morning star. What does it mean? Morning star means, like, when you look at the, when the sun rise, and and when the sun goes down and the star comes up, that's sort of like a conceptual. Try to basically remember it. That's what we do it. So when we see this kind of pattern, that give us the high probability, that possibility, this is the morning star, because even if you don't see the candle exactly the same, but if you see the 50% of this candle in Forex trading, we still consider this one as a morning star. That's a high probability of continuation. So you can see every candle is full of story between bull and bears. So let's look at another candle. Okay, so now we look at the bearish. So now what we have seen it, when the price is coming down, when we see the price is going to go up. So one of these candles, which we can explain, if this candle's pattern comes in support and resistance in certain patterns, we look at the high probability price is going to give us another opportunity for buy. Same thing apply for the bearish candles pattern. So we look at this shooting star. What does it mean, shooting star? If you ever seen a gun, which is basically shooting it, so this is like a gun. This is opposite of the hammer, but technically looks at the gun. That means like this is the gun, we're shooting here, stars, right? Again, if you look at the story point of view, the bearish candle started here, went up, and at that time there was a bull candle was developing it. The bull was trying to take the market up, but we have selling pressure, bearish pressure, and at the time then bearish again down and closed and created this box. And then we can see here this like a shooting star, and at the end we look at who's winner. Is bearish is winner, bear is winner, because sometimes these kind of shooting star or hammer give us the early sign that the price possibility is going to reverse. So these are the very, very important signals for us being a trader we look at. So this is a shooting star. You can take the picture and you can read this information. I'm just going to give you as a layman point of view. It's easy to remember. Okay, so let's look at the another one, the bearish engulfing candle, which is the opposite of the bullish engulfing candle. And if you look at here, same story. We have previous candle was very strong bullish candle, but when the candle closed here and the next candle started here, went up, and then at the end, bear has taken care of it. As you can see here, this candle is way above than this candle. So, and you can see we call a bearish engulfing candle. It means give us the significant information. high probability the bear is in control. So high probability the price might going to shoot down. So this is what we look at. Okay. So let's look at the other information is a dark cloud cover. Okay. Again, if you look at here, which is you can see the price started here, started here and closed here, bullish, very strong bullish candle. When the bullish candle closed, bear came into the market, went up and then push it down, cover more than 50%. Let's pause. This is the 50% of this candle, close here. So this is the current candle, we called it. And this is, we have a nice bull run first, but it looks like price has covered, this body has covered more than 50% of the previous body. It looks like the bear is getting in control. So the high probability price might gonna continue to the downside. So this is the way we look at here. Okay. But if you look at this information, which you can read it. Okay, so let's look at the another candle, another pattern. Right, so evening star, which is again, we have a morning star. This is the evening star, opposite of it. Again, the same story. We can see here the bullish candle started here, strong bullish candle, and then another candle started here, went up and went down, but then it closed at the same place when it started. So you can see here this kind of pattern develop. It's not going to be 100% exactly the same, but more or less the same pattern is going to develop. Second candle, you can see here candle started. So instead of bullish candle start, it started bearish candle, a very strong candle. It means even if it's a 50% of this candle, we still consider this one is an evening star that give us the bear has taken control of it, and then more likely possibility of continuation to the downside. So you can see here every candle body, every candle's pattern style give us the sentiment of buyers and sellers, and then we align with the other technicals and we look for the opportunity. So this is the evening star. Okay, so let's look at the another one. Okay. Right, so now these are the reversal, bearish and bullish reversal candle pattern, which give us the information whether it's going to go down and up. So there's some patterns which give us the indecision candlestick patterns, which is called a spinning top, and that spinning top called indecision. We can see here there's a spike. Okay, if you look at that, can be a bullish and bearish both. Yeah. So if candle started here, went up high here and then low here, but at the end you can see here this area. So what does it mean? That there's is bull and bear was fighting into it. So we have sort of like we can see a indication that bull has taken care in control, but we don't see the strength on the bull here right now. So there might be the second candle might be a bullish possibility or might be a bearish, because even though we have bullish body, but it does not define that it's going to be bullish. So that's going to be indecision situation, right? So this is the way we look at this spinning top. You will find many spinning tops, in trading client pattern. Another one, yeah, that's what we call a doji, right? Doji means like when the candle starts and when the candle close at the same place. So it does not create any body. This is what we call a doji. As doji means like, indecision situation. The next candle might be up or might be a down, depending on, then we have to wait for the next candle to be appear. That give us the information. Then we have a dragonfly doji. That's again decision making, because the candle started here and closed at the same place, but it went down. It's a dragon. Have seen dragonfly? It's just like a dragonfly. So it means there was a bull and bear was fighting going on. No one has won any fight here yet here. So we don't know, the next candle might be a bullish, bearish. So this is going to be indecision, because we have seen the fight was going on, because when the candle started here and the close here, the same place, but between that we have a bear has taken control, but bull also tried to take a control, but the end they close at the same place. So we don't know who's going to be winner next time. So that's also gives us the indication that high next probability of next candle give us the high probability. Same thing apply, we call the gravestone doji, means the same opposite of this one. We can see here the candle started here and bull started taking up, but the bear had came down, but bear did not go went below this level. At the same time, the candle closed. So we have seen this fight is going on here, but it looks like no one has won any battle yet. So next candle will give us the high probability who has won the war. So that's what we look at. So these are the indecision candlestick pattern. Now we look at, okay, if the price is going up and then whether this candlestick pattern give us the information is going to continue or is going to be reversal pattern. So we look at the rising three method and falling three method and bullish harami candle. Harami is a Japanese word, means like pregnant woman carrying a baby, right? And then we have bearish harami candle. It means carrying a baby, right? Okay, so let's look at here. There's another terminology, we also use it. Look at here, what happened here. We have this impulsive reaction, a very strong bullish candle. Then we have a very small bearish candle. This candle represents strength of the buyers, but this small candle does not give us the strength of bearishness, right? And then what happened here, when we see the three small candles, there's a high probability that price might gonna shoot up, right? This is one area of looking at, but in trading, we have another method. We have impulsive reaction, price push up, and the buyers have taken full strength, and then afterwards the buyers are out of the market, but we don't see any sellers in the market, and that's why it looks like it's jumped, but it got tired. Now take some breath and then continue. So we don't see any seller in the market, and later on we can see that as soon as the seller comes. You know what kind of this information appears? It happens like when the session started in London morning, or when the London New York session closed, we see the big market, and after that you will see the market is very slow, very slow, very slow, very slow. And then as soon as the Tokyo session open, you can see the market shoot up. So we align it. But in candlestick pattern, when you see this kind of pattern, one impulsive move, and after impulsive, if you see the market is slow down, so look for another possibility. So same thing, falling three method is just like, okay, so falling three method example, it is opposite of this one. You can see here we had a very strong bearish candle, very, bearish was in control. After that, you can see here no one in the buyer in the market, and that's why you can see a slow market. And then afterwards, we can see a bearish came into the market again, and that's what happened. That's what we look at here. This is another sign of it. Like, for example, if we see the price is going up, and then we have another candle inside candle pattern, we call a bullish harami candle, a bearish harami candle. So we look at here, the best way to trade these candlestick pattern, it's very easy. What we do normally, we do this is what another part people call a strategy, but I don't call the strategy because it doesn't apply all the time, but most of the time it does apply. So for example, this is the high, this is the low, this candle. So we said, okay, if the candle close above this one, then it's going to go up. If the candle is going to go back, this is going to go down. Yeah. But we look at this is the continuation pattern. So for example, if the bullish is coming here, we can see the bull has been taken care of it, impulsive move, and now bull is taking rest. We don't see any buyers here. That's why we don't see the candle close above this level. And that's what we look at. There's a high probability of continuation. Same thing apply here. We have the bearish candle started here, and afterwards the bearish has taking rest, and we don't see any buyers here, bullish here. So when we look at here, there's a high probability, and the candlestick pattern is inside candle pattern, high probability of continuation. If you look at the candle close below that, then possibility of short. So these are the candlestick pattern we discuss every single day. I discuss with the live analysis in 4 hours, and because you cannot remember all of them in one go, but if you see it every single day, more likely you program your subconscious mind, because this is what happened. Because I discuss this thing every single day. You can watch on my live analysis, you will find out. Okay. So let's talk about the, a few example here with this candlestick pattern. And okay, so one is pattern. I'm going to show you with the, let's look at the, I'm going to give you example of, let's look at the trades. Okay, so this is my MyQFX platform. Let's look at the pound dollar, right? And let's recognize some of the patterns. Okay, so again, this is the intraday chart system. So this is not a candle based or not a time based. This is a price based. So we can discuss in different webinar. So what we're looking here, looking in a 4-hour chart here, right? So if you look at the 4-hour chart, okay, make it slightly bigger. Okay, so now we're going to look at the patterns which we discussed. If you look at here, what kind of pattern is this? Okay, you can see here, shooting star. What happened here? After that, price came back. Okay, so if you look at here, what kind of pattern is this one? Can you see here? Bearish engulfing candle. What happened after that? Price came down. So we have another candle. What kind of candlestick pattern here? You can see a very strong bullish candle above. You can see here, price went up. And what happened here? Price came back, bull was in strong. Look here, 1, 2, 3. What happened after that? Shoot up. So these pattern, which is I just explained, it does impact to the market. And this is what we look at. We look at everywhere. Look at you can see here, bearish engulfing candle, price came down. Look at this one. Support level. What kind of pattern you can see here? Tweezer bottom. You can see it. Different two tweezer bottom. After that, what happened here? Price went up. And then you can see here another one, what you see here, a shooting star, and like doji, you can see price came down. What happened after that? Bull run. Perfect. You can see it. And then what happened here? Look at this candle. Look at this candle, inside candle pattern. What we call inside candle, bullish inside candle pattern. Bull was in control, take a rest, and then continue. And you can see here, like today mentioned here, you can hear this one is shooting star. Beautiful. We look at here, price more likely that we've been short today on intraday. Now, what kind of candlestick pattern is developed? Look at this one. What happened here? This is the impulsive. Now the market is slow because the New York session is going to close in a few hours, probably, yeah. So you can see, so these candlestick patterns apply everywhere, every day. We look at here, every candle has a story telling us the sentiment of buyers and sellers. And we take that information and then we use this overall chart when to get in and when to get out, right? So this is what we do, like in the morning, based on this previous information. So we had it, this is the information. We look at the breakout short trade here. We have another one short trade here, right? So we've been analyzing market here, and based on that, we're analyzing entries. So let's look at another one more charts here. Let's see. Okay. Okay, let's look at the another one. Okay, I can do it from here. Let's look at, okay, so let's look at the, if you're using a trading view, most of the, you can open a free account with the trading view too. So let's look at the trading view. So just in case. And if you look at here in trading view, we also analyze the market every single day. You know, every single day we analyze the market here. So let's look at the Euro USD. You can see a support and resistance. We look at, you know, what kind of price action has been developed. What is this pattern? So we discuss every single day. Okay, so what we learned today is the candlestick pattern. So let's talk about the candlestick pattern. So if you look at the candlestick pattern here, you know, I just mentioned you in our trading platform, but you can use TradingView. Look ahead, this kind of what it give us the indication. You know, this is called a spinning top indecision. What kind of candlestick pattern is developed? The bear is taking control. What candle is developing it? You can see here, we have indecision candle, spinning top, we have indecision candle, means the price hasn't decided whether it's going to go up or it's going to go down. So if we see the second candle is going to develop a very strong bullish candle, then it means the price might going to continue up, right? Then we look at the pattern. That's again part of it because price previously respected here. So I'm looking possibility of short here. So this is what we look at. But we look at here this. What happened here? Kind inside candle pattern and price nicely broken and beautiful long trade here. So all these candlestick pattern basically apply. If you look at here, like we can see here, if you look at the, we have a very shooting star candlestick pattern. Then afterwards, if you look at the body of this candlestick, very strong because what happened here? So bull was trying it, but there was a bearish control, you know, pushing pressure. But even though the bull has taken control, but what happened after that? The bear fight it and take the control from the bullish. So what happened after that? Beautiful journey. So this is the way we explain every single day, guys. So, and whatever the price action you do it, candlestick pattern, it's a very, very important, and it helps traders to basically identify the high probability trade and trade successfully. So that's it for now for the candlestick pattern, fundamental and technical analysis. I hope you have learned something, but I recommend go through all my previous analysis, not one time, 2, 3 times, understand it. Then you will get the pure essence of MyQFX platform. Whatever we are trading and training with the live market, we are giving the basic price action, which is industry standard, because our motto is to keep it simple and you know, and keep it consistent and profitable. I hope that makes sense. Now I'm ready for take all of your questions, guys. Any questions?
Nothing
Feel
in the
free.
chat. I think you give such clear explanations that people don't have any questions, because today's session I learned a lot on the candles. Dr. K, I'm sure you were really focused. I could see you concentrating as well.
You can apply this candlestick pattern even if you're trading in stock, shares, or crypto, whatever instrument you're doing it.
Yeah.
And to be honest, if you apply this thing, you will be amazed. You know, the only scene I've seen people traders who basically does not make consistent in trading because they don't have the patience and discipline. But like I'll give you another example here. Let's suppose if you have only 20 minutes a day or even 10 minutes a day, you still can trade. How? If you remember all of my price action, you know, the price behavior patterns and the structure, number one. And if you understand the fundamental when the news is coming, and you don't need to go 4 hour, you can click on the daily candlestick pattern. And how hard to see in daily candles. So in that day, when this candle close and you see 10 minutes, oh, wow, I can see rejection. We'll see if the price is going down. No, I can take a short trade here, right? So you can develop every candle, every single candle is closed in one day. So because we are intraday traders, we just make pips and get out. We don't basically leave the trades open. These trades you can leave, like if I see that this candlestick pattern is developed, we can see here, but that's give us a completely, you know, bearish rejection and bull has been taken control. You open a position here, 1, 2, 3, 4, 5 days, you make a lot of pips here. But even if you have only 5 minutes, not even 10 minutes, you can go and weekly check candlestick pattern and see it. So you can apply all that information in a different time frame and find the best way where you can, you know, materialize and get a, you know, amazing trades. I hope that makes sense. All right, guys. So that's it for now. And if you need some information or something, feel free to join our platform. You know, I do analysis at the London morning and the New York session, 8 a.m. New York time.
Hey,
And
Anwar,
yes, my friend.
I was gonna ask you, do you do like one-on-one meetings, like just to teach us in a more detailed manner? Do you have somebody in your team to teach us?
Yes, I do. Basically, we have two sections. One is basically for normal audience, we have a platform where we do everything. Where we do have a coaching and training program, and that's coaching and training program leads to be a funded trader from the QBN side. That's because most of my students who came to the one-to-one coaching and training program, and then basically my job is to train them and to make them become a successful trader, and then they can be a part of the QBN as a successful trader as well, right? So for that information, definitely contact contact me or contact to basically QBN. QBN member is just, we all basically QBNs. I'm also the part of the QBN. So contact to the QBN management. I'm looking for one-to-one training, and you can land it to me, and then you can contact me, and then I'm more than happy to give you training one-to-one. Yes, another. We've been working to develop another coaching and program, which is one-to-one, which is MyQFX. And then definitely I will share that information, which is more precise training based on the individual needs and individual lifestyle. But whatever we do it every day, everything is in MyQFX platform. So most welcome. Talk to one of my team here. Definitely we can have a one-to-one session, or I can tell you the training.
Thank you. Ashraf, I had a query from somebody in Spain, and they
Yeah.
wanted to know whether your live analysis could be shared in Spanish when you're is there a tool that we can plug into MyQFX? So when you're giving the live analysis, there are subtitles or something that can be plugged in. It's just a thought. I just remembered. I remember a few people coming up to me and asking that for the live analysis when you do it on the MyQFX platform.
Okay, so to be honest, the thing is I am using a tool of Zoom, which is I'm gonna be looking into it. But if you can find it, and then I'm gonna be looking into it, will definitely, because I've seen recently we had a very amazing event in the Cuban in Spain. We have
Yeah.
amazing audience from there, and we have found there's a lot of traders from there, and
A
definitely
lot of
I
people
love to
actually
have.
came up personally, and I said, and I just, as we were just talking about trading, I just remembered. So if you use
Yeah.
Zoom, we should be able to use the captions option, I guess, at the bottom, where they
Perfect.
can give you,
Yeah.
like at the moment, I have captions on where the English is translated to Spanish, but we'll find a plugin or something and get that sorted.
Perfect. If you find it, just let me know. I'm more than happy to do it, you know. Yeah, definitely I'm planning to do it. And plus basically, as you have seen that I just in my home, I just made a studio here trading, because I'm planning to record a lot of training videos, and then basically translate into the Spanish. And then
this
definitely
webinar
we
is
will.
going to get, as soon as the call ends, is going to go into my Spanish translation as well. Then you'll see Ashraf Noor talking Spanish, right?
Yeah, that's amazing. I wish I had some pills that I can speak Spanish. That would be nice, but it's okay.
It's good. It's all good.
Yeah, it's okay now. So the training next. Let's decide the agenda of next training. In next training agenda, we're just gonna talk as a normal, as a layman, as a retail. Like for example, if you're working as a full-time, part-time, how you can organize your as a trading plan, or if you want to be as a full-time in trading, what resources you needed, and how you should make a plan to become as a full-time trader, or if you want to trade in a few hours a day, how you should make a plan to trade, how you should look at them, because I'm going to cover a lot of things which is already explained into the last webinars, but I'm going to show you as I make a plan. For example, if somebody comes to me, Ashraf, I can trade only 2 hours, what shall I do it? So or if somebody say I want to trade as a full-time, as a QBN trader, and I want to trade with the QBN funds. So what is the procedure? How should I go for it? So I'm going to explain you all that information. That's the going to be, information. And then after that, we're going to be doing last week in my all of my analysis review, how I analyze the market and how the market behaved it. And then basically you gone through as a systematically approach. I give you all that information, all of in my webinars. Moving forward, we're going to be talking about the real market, what we have seen the market, and what are the opportunities can develop, both fundamental point of view and from both in the technical point of view. I hope that makes sense. Does it make sense, Shazia?
Yes, it does. Because I just made the
Yeah.
note. I got to get the posters out.
Absolutely. So next week is going to be very amazing. So anybody who wants to trade, how should be looking into it, whether he have a 10 minutes or 15 minutes, or whether he wants to trade the
Trading
full
plan.
time.
Yeah.
Yeah, trading plan, how to make it, whether they want to trade only from mobile or they want to trade with a laptop, or I'm going to give you all that, because I have a lot of, because thousand people came to me and I trained them, and based on their lifestyle. So I'm have a lot of information, which is I'm going to help you to build it. Even if you have a 5 minutes, you can still trade. How you can do it, I'll explain to you. All right, guys, thank you for coming on board, having me, and it was nice seeing you guys, and hopefully we'll see you next week at the same time.
Thank you, Ashraf, as usual. Thank you to everybody who joined, and we'll see you next week, and hopefully next week without any technical glitch. Take care.
Yeah, hopefully. Yeah. All right. Good evening. Bye-bye.